Welcome back to Exponential Investor, the Money Week podcast dedicated to next-generation technology and the investment opportunities it provides. This week's podcast is a little different. Nick has been working hard on a new newsletter. It's called Frontier Tech Investor, and it's all about investing in the companies poised to profit from the imminent technological boom. All the investments are picked by Eoin Treacy, who you'll have heard if you've listened to previous podcasts. Eoin is a world-renowned financial strategist, and he's selected a small portfolio of stocks he thinks will make serious money in the next few years. The research behind Frontier Tech Investor has taken years, so we won't give everything away for free. We've redacted the names of Eoin's picks, which are available for a small fee in the newsletter itself. Hopefully you'll still find the interview interesting, as Eoin has a lot to say about soft solar technology, a pharmaceutical company with a great track record, and how to play the metal that will fuel the new energy revolution. If you want to get Eoin's tips in full, you can sign up to Frontier Tech Investor. The link's below. Enjoy the show. So I'm here with Eoin, the investment director of Frontier Tech Investor and Exponential Investor, and I wanted to ask you a little bit about the companies you're going to be tipping this month. Am I right in thinking you're tipping 4 companies?
Yeah, that's right. Technology is such a bounteous thing to talk about, and there's never a shortage of things to write about. But narrowing all that down to actually what one might be able to invest one's limited resources in, that's where the real challenge is. So, we take the entire universe and try to narrow it down to 4 to start things off. Was a bit of a challenge because there are so many things to talk about, but I think we've got some pretty good candidates here.
You seem to be particularly kind of invested in, at least initially, in one of my favourite areas, which very generally speaking is the future of health. So what can you tell me about to start with?
Well, is a really interesting little company. Little in that they're a market cap of about 1.2 billion. And primarily what they've made their money from so far is multiple sclerosis drugs. And you might have seen them in the press recently because hedge funds have decided that they want to go after pharmaceutical companies to try and pressure their patents, and Kyle Bass has tried to attack them. So the share has pulled back really very sharply, and that's the kind of thing that I get interested in because the valuation is halved, and they've rebuffed these types of advances previously, not least from generic the pharmaceutical manufacturers. So they have a pipeline of drugs, 3 drugs in late-stage development. And while the majority of their income has come from multiple sclerosis over the last few years, that's not going to be their future if any of these late-stage developments really come to fruition, and we'll know that by the end of this year. So then what we're presented with is not only that there is potential for revenue growth in future, but also that we might be in the stages where some activist hedge fund manager may have offered us a potential entry opportunity that's really quite attractive. So when you get those sorts of things lining up and the potential for things to really improve towards the end of the year, then this is probably a good time to start thinking about initiating positions.
So for those who haven't invested in biotech before, how difficult exactly is it to get to phase 3 of clinical testing? How many products fall before they reach that point?
The short answer is a lot. This is the way to think about it. If you're someone who is starting out in the biotech sector as a developer, then there are a number of opportunities that you might have to sell your company. The first one would be when you get to the stage where you get to start off with stage 1. And if you get a drug up to a point where you can even start trials, then it becomes an attractive purchase opportunity for larger companies. Then it becomes a more expensive purchase opportunity when it passes the first stage. It gets to be an even more expensive proposition when it passes the second stage. And even then, there are companies that would sell their business when they get to the third stage, because there is obviously a risk that the Federal Drug Administration or the European equivalent will shoot them down. And it isn't every company that can pass its stage 3. But when you're talking about a company that has already got patents in the area, and then they're attempting to get another patent in the same area, then their chances are a bit better. So has got a number of these in the pipeline, and all they need to do is to get one over the line, and then that's going to have a transformative effect on their revenue.
So several very promising drugs, several already successfully working, and as far as I understand it, drugs like are market leading already, so no real reason it seems that those phase 3 drugs can't imitate their success.
I think there's always uncertainty when you get to these types of things. I mean, we can't have an absolute sense of security when we start to think about these types of things, but nevertheless, we're really at a point where this has pulled back very sharply, and a lot of the bad news is already in the price.
And it's pulled back for kind of external investor reasons rather than because the products are worse or because of a problem with management. This is due to the actions of hedge funds, right?
Yes, absolutely.
Okay, so I can see why that's appealing. Moving on to your second kind of medical themed pick. Are they the company behind?
Yes, that's right.
So I interviewed, or rather, sorry, Farah interviewed Casper Althofer, the King's College London roboticist, and he was talking about and explained they're already in use. Where in the world are these systems working?
They're working increasingly everywhere. That's very encouraging. Primarily it's a US company, so often with these types of companies, and absolutely falls into this mode that the majority would be from the US, and then their second stage of growth is globally. And that's exactly what is happening right now. So has grown at the beginning in the US and now is moving internationally, and it's really incredibly important because what you get is as incomes improve and standards of living improve, what you get is people demanding that they get a better standard of healthcare, and that's one of the things that provides. So when you think about exactly what it is that they do, then they improve the success rates and the ability of surgeons to not only improve their success rate, but to reduce the potential that they're going to be sued. And that's a very big consideration for doctors. When you're engaged in surgery, then there is a real risk that you're going to lose everything because of a small mistake. And when you introduce robotics, then that there is a great potential that some of the silly mistakes that could cause you an awful problem later then become less of an issue. And of course, the real story for, regardless of the fact that 70% of their income comes from the US, then the potential for great growth in Europe and then growth in Asia in particular represents their real trajectory, and that's a concrete trajectory. But the potential is that the automation of simple solutions and suturing particularly by these robots, and there's some real work going on to achieve that, then it's really going to transform the productivity of surgeons. And when you talk to someone who's highly paid and you tell them that you buy a machine and you can enhance their productivity and therefore their earning and mitigate their risk from additional litigation, then they're going to jump at that chance. So this is a very interesting company.
What's the regulation situation like for a company like? How far away are we, say, from approval for robotic surgeries in the UK, and what's it like in other markets?
Well, right now there's no real barrier to the types of products that they're offering right now, because it really is only a machine, and it is still the surgeon sitting at a console and making all of the incisions with his hands, and then those incisions are carried out by the robot. What we are looking towards is that the robot will just do the suturing on its own, and that's already quite capable in the lab, and there's some great YouTube videos of the robot suturing the skin back onto a grape, so that's incredibly delicate work. But we're we're not there quite yet. It would have to be demonstrated beyond the shadow of a doubt before robots are let loose on people. So we're probably a few years away from that yet, and in the meantime, they'll continue to grow, and not least in Europe and in the emerging markets.
Slightly surreal for me because I remember watching the second Star Wars trilogy as a child and thinking even then how absurd it was that they had medical robots suturing wounds. So clearly leaps and bounds. A slightly different company now, but I'm probably the one I find most interesting on this list. Can you explain for me what exactly the role is of, unless I've made a mistake, of T. Boone Pickens in?
Well, T. Boone Pickens is an energy pioneer. He's been in at the ground floor in a number of different areas in the energy sector, and I've been following what he's been doing for a long time. And over a few years ago, I saw that he'd invested in a company called. I'd never heard of it, so I started looking at it as well and researching it. And since then, they have changed their name to, which is really the name of their prospective product. And where this is really just game changing is that this is a film that can be sprayed on to any transparent surface, and which will then turn it into a solar cell. And they're not 100% transparent, so it has a sort of a Polaroid effect. But what it has the potential to do is to turn just about every high-rise in the world into a power station.
So we're likely to see rather the disruption of traditional natural energy by solar and by other renewable technologies, but it sounds a little bit like will disrupt even within that industry because it's not space. It doesn't demand much space. It can be used anywhere on existing structures.
Yeah, and of course, it just needs the vertical space rather than the horizontal space. So you don't have to devote large tracts of land to solar windows. In fact, the infrastructure is already there, and it can be retrofitted onto existing structures. And I think their mass production and the issues that they're trying to iron out is just how to get it mass produced so that any new windows that go in can just be manufactured by them. But yes, it's an incredibly just enlightening story of innovation. But it also is an object lesson because one of the things that we see in just about all new technologies is that the companies that originally come up with the technology really have to work incredibly hard to keep up with the kinds of inspiration that they give to others. So solar cells have been around for quite some time and are improving every year in terms of their efficiency, and yet they have the potential to be completely blown out of the water by new technology coming along, and that is the kind of potential that the solar window has, because when you listen to what their CEO is saying about the ability of the solar cell to earn its money back in terms of savings within 12 months of installation, well then, if that's even close to true, it's absolutely transformative for anyone who were to buy it. And then we've seen an awful lot of discussions about subsidies for renewables, and there's this sort of high profile disagreement going on between the utility of one of the utilities that Warren Buffett owns in Nevada and the solar companies that have been selling power there, or selling power generating capacity to consumers there, and then that would become absolutely obsolete. We wouldn't have no need for subsidies or that kind of argument if solar cells were more efficient, and they will be more efficient. And
so, for context, how long does it take now for a solar cell to recoup its installation cost?
About 5 years ago, it was nearly 10 years, and right now it's about 5 to 6 years, depending on which one you and of course where you live.
So it's a kind of a massive step change. Then it's not even close. The technology that exists is nowhere close to solar window.
It's an order of magnitude better. and that's just these are incredible advances, and their real challenge right now, because it's still a development stage company. They do have a product, and it is about. And when I talked to them late last year, it was really their main concern is with mass production of their product, and that is the stage that they're in. They're pretty confident of the technology that they have, and they're really moving aggressively towards commercialization.
So we talked a little bit about the stock chart of the chart for is quite interesting. So in 2007, quite near launch, they absolutely shot up. I don't know what multiple it was, but they increased in value enormously. Then, in line with the market, but perhaps even more drastically, they fell, and they've been sort of steadily climbing since then. What was the story behind their initial kind of meteoric rise? Was it as simple as a great technology laid low because it wasn't important at the time? There were other things that money needed to be saved elsewhere. What was the issue?
Well, the reason that it had shot higher was that they came to the market and said, okay, we've developed this thing, and it's really going to blow everything else out of the water. And everyone got really excited, and then asked a really important question about when. And 4 years ago, the when was 2017, and that's a lot more important when you're in 2016 than it was when you're 4 or 5 years ago. So then the share just came right down, because there's not many people want to leave their money in something for that length of time without the kind of surety. But what's probably important is that wasn't the only company trying to do this. And there were Nobel laureates started companies, and that you had companies breaking out of MIT, which have subsequently gone bust, and has survived. So that's a testament to not only the fact that they have a technology, but also that they're reasonably well capitalized. And what you've seen over the last year is that the share has gone from $1 and change to $4, and $4 is still only where the peak was in 2012 and the peak was in 2013, and so it's really the upper side of a very long base formation, and this is a very constructive chart pattern. So I'm really very bullish about this, because when it goes, it could really go very high.
Well, it's certainly a chart for subscribers to look at, because the peak is kind of phenomenally higher than launch, but than the price now as well. So clearly, as you say, a very promising chart formation. Your last company, different sector again. I hope I'm pronouncing this right. Is it?
Yeah. And well, it's probably a linked sector to solar, and the reason is that. Solar is wonderful, and solar efficiencies are getting better all the time, and that's great if you've got them on your roof. But what you really need is something to give you some power when the sun is not shining, and particularly at night. And for that, you need a battery. And the lithium-ion battery market has been pretty mature for the last 20 years. So they've been producing small batteries, the kind of batteries that go in your camera and go in your laptop. But the evolution of the electric car market is having a really transformative effect on the lithium-ion battery demand cycle, because the size of the battery is orders of magnitude larger. The growth trajectory of the electric car market is improving, not least because of all of the environmental regulations that have been implemented, and not least in Paris last year. And then that's only a part of the growth trajectory, because utilities are implementing battery storage in order to smooth out their supply profile, because the way that a utility has to provide energy is very spiky. So they have to have excess generating capacity for certain times of the day when there's a lot of demand. And if they had big batteries, then they could smooth out their ability to generate electricity, and that means then they would need less spare capacity. So it would be just a wonderful way for them to save money. But that's going to require lithium as well. And what does is it's on the supply side. It's a lithium miner. Now, lithium prices are rising, and lithium miners and being really quite a big one. And this is the important point, is that so when you're looking for lithium companies, you have to find one where the majority of its business is lithium, and is that. In fact, there was news just the other day that they really are trying to run down they're not investing at all any further in their borax operations, which represents about half their income. And they're just aiming over the next 3 years to be just a pure play on lithium. There are a number of other companies that are also producing lithium, but then lithium doesn't represent the same influence on their revenue. So you're not getting the investment bang for your buck, if that's what you want to get exposure to. Now, they are all investing in additional supply. So that will come online in about 3 to 4 years' time. And at that point, then the big question is going to be just how much demand there is. Now, there's every reason to believe that demand will still be incredibly strong, and that the demand growth profile for lithium is going to be just as bullish in 3 or 4 years from now as it is today. But in between now and then, what we have is a supply inelasticity meets rising demand type market. And that's the kind of environment where prices can go up a lot. So this is a really very exciting period of time for lithium miners, because they have a commodity that battery manufacturers absolutely have a requirement for, and really have no choice but to pay for it. And then a lot of their supply is on long-term contracts, but then any of the new supply will be contracted at a much higher price. So that's why they're racing to develop new supply, and it's going to be incredibly value accretive for them.
And obviously, in general, it can be a risky sector, mining, but I suppose if we're talking about a future tech themed portfolio or part of a portfolio, it's reassuring to invest in a real asset. What can you tell investors on that theme who don't know a lot about the location of the mines? Because as far as I'm aware, their mines are in Argentina. For investors who don't invest there, what's the situation there like for investors? Is it stable politically? Is it encouraging economically? What's it like?
If you'd asked me that a year ago, then the Kirchners were in charge in Argentina, and the place was just a basket case. And it just shows you how transformative an election can be. Because the Kirchners are out, Macri is in, and he is... the first thing he did in office was to sweep away the currency controls that the Kirchners had instituted. They have begun constructively engaging with the country's creditors, the holdouts, from their sovereign default over a decade ago now. And then, so this is really very, very encouraging that Argentina is coming in from the cold, and what they need is money, and then they're really interested in people investing down there. What they really want is to develop their commodity potential, and they are one of the most aggressive in trying to get their lithium up and running. But what they're trying to do, because they need money, is they're going to introduce a new royalty program. They're a bit slow in giving new mining rights out to companies until that royalty program is in place, but got in before the deadline. So they're going to be able to get their supply out, whereas a number of other companies that are trying to do the same thing will probably have to wait.
So kind of a government-created or policy-created space in the market, which is very good news for investors.
Well, for investors, at least in the near term, absolutely.
Brilliant. Well, can I ask then, Eoin, If you had to single out one of these as the one you're particularly excited about, which would it be?
I think that if you were to buy one today, then is the one to buy today, for the simple reason that this, what you have right now is Tesla saying that they've taken, I think it was 170,000 orders for their third model of the car, the Model C, I think, in the first day, and it's up to 285,000 now, and their Gigafactory, which hasn't even opened yet, has a maximum capacity of 500,000 cars a year, and just with the Model C alone, they could be clipping that. By the end of this month, if the pace of pre-ordering persists. So they're going to require an incredible amount of lithium to feed that factory, and the factory opens later this year. And it's going to require 10% of global supply to keep it going. But what a lot of people don't realize is that Tesla's Gigafactory is far from the only Gigafactory under construction. That the Chinese, Korean, and Japanese, who have dominated the battery manufacturing sector, are also building here. So, I think lithium is one that is just a standout right now. It's the one that I have the greatest confidence about.
Interesting. Great. Thanks a lot, Eoin. I'll catch up with you next month. Good luck.
Great, and I look forward to it.